And we are live. Welcome to Be the Bank, brought to you by FIXnotes. This is the best place on the internet to learn about the distressed secondary mortgage market. You're in the right place, and I'm excited to get to today's show, which is all about automations through Zapier and some other web services. And of course, we'll run through some case studies, a bunch of other content for you today. Let's get into it with the presentation. We got a lot for you today, folks. And that's Be the Bank every Wednesday. All right, today's agenda. We've got a great show for you on episode 8 on the 29th of July. We'll start with the overview of the industry. As always, we'll talk about some tech. Very exciting today. We're talking Zapier automations. Then some asset acquisition opportunities, which is especially exciting today because I finally built the self-serve reviewing of assets on the website. I'll show you all that in a little bit. And of course, we've got 2 case studies every week. Today's no exception. And then we'll talk giveaways. So thank you so much for being with me today, guys. I'm very excited to show you some really cool stuff. Let me turn down that audio a little bit more and let's jump into it. So as always, we start with a little bit of housekeeping. I want to show you just a higher level advertisement. We've got a free course on the website you can definitely check out. But we always talk about our week of non-disclosure agreements and buyer signups. So we had 6 buyers sign up this week. I want to thank you all. Jordan, Kobe, Karen, Mahendra, Ryan, and Ahmed. Thank you so much for joining us. You've successfully submitted your profile to me. And let me take a quick look here. All of you have executed the non-disclosure agreement. So nice work. You are the first of a new group of investors who are actually able to log in on my website and review assets for sale. So we'll talk about that a little bit more later. But for now, go over to the website if you want to learn more about notes. If you've signed the non-disclosure agreement, if you've started that profile process, you've been given access to all of this for free as well. So just head over, log in with the email address you used on your profile, and you will be able to access all of that content totally free. And let's actually get into the industry overview now. So we have a new section on the FIXnotes website as of a month ago, fixnotes.com/news. There's loads of different industry sources compiled here. I've created an aggregator to review content from all over the internet that you may be interested in as a real estate or as a note investor. So that's very cool, and you can check that out at fixnotes.com/news. But we'll skip over that for now. You can absolutely ask me any questions about the articles you see on the fixnotes.com/news page. There's also a little ticker on the home page, which you can see the up-to-date headlines. So of course, we want to talk about market pricing because that's a critical component of the industry overview. And it was pretty interesting today because there was an IMN default servicing and distressed mortgage note webinar, a webcast with basically one host and 3 panelists going over some questions about the market. And I believe that their answers did reinforce some of what I see on this chart, which we created back in the beginning of Q3. And it has evolved a little bit, and we'll definitely have some updates for Q4 as the real estate market is really coming to terms with the pandemic. But the general consensus, and we'll get into this a little bit more, is that there's still a fair amount of uncertainty. Not only is there uncertainty around the pandemic and the housing markets, but there's major uncertainty around the election as well. And regardless of which way the election goes, that just passing that milestone of the next inauguration is going to eliminate so much uncertainty for investors to really hone in on proper valuation. So we're in flux right now. There's a lot going on. The non-performing waterfall evaluation. This is a chart we've been touching on for maybe 5 weeks now, and we drill into different categories of this chart every week to show you guys a little bit more about the real in-depth due diligence discussions that take place on every level of this waterfall. This week though, since we're talking automation, we're going to kind of glaze over this and not get into too much detail. I did update this chart with some updated figures on the high-level value ranges for first liens and second liens. You'll see that that now corresponds a lot better to our market pricing chart. Previously, I had values in there that were a little bit stale. The 5% to 85% of value for first liens capped at like 50% of value. because at the time when I created this chart originally, we were operating in much lower value band first position liens where the cap really is 50% of the fair market value. And I'm talking when the fair market value securing your collateral or securing your mortgage note, your debt is, about $50,000, $60,000, $70,000 and less. You really don't see those those assets trade on the market for much more than 50 cents on the dollar. But when you talk $100,000 plus properties, 85% of the property value is a very reasonable expectation for pricing, depending on a lot of the other factors. And then in second liens, we've increased that range to 60% of UPB because we've actually seen a lot of deals this year that are even exceeding 60% of UPB based on geography and equity mostly. Senior lien status is a big part of that junior lien metric. So we're not going to get into too much detail because I want to talk about this call I was just on, the IMN webinar. So I'll squeeze myself, if I go this way, here we go. So there was four people on this call. One was kind of the host. She's in the upper left, Karen Gatos of Pikes Peak Capital. And then we had Nicole, Tom, and Spencer as various panelists. And they answered a number of different questions. Here's what was kind of advertised as the agenda. Now, they didn't go over all of these questions. They actually took a lot of user questions or viewer questions that were helpful to the audience. But I would definitely encourage you to go over to the IMN website and register for news from them because I was on the list, so I got an email that there was this webinar coming up. It was totally free, and it was a great opportunity to not only learn from these experts, but also to network with all of the investors who had participated in that call. They provided an attendees list for everyone who joined, and you're able to see where people work, what their names are, and how you can discuss more. You actually had an opportunity to build a profile within IMN.com in their back end so that people could communicate with each other after and before the call. So that was very cool. A couple questions they went over: how are note buyers responding to the pandemic? Where are today's opportunities? What are the key factors that are driving default rates? Obviously the pandemic. What can we expect to change? What are the trends we're seeing in the NPL market? Innovating technology applications in the NPL market? How have valuations and appraisals changed, and will they continue to change? What's the forecast on property values? How do these specific organizations perform due diligence? How's title insurance changed? What are some successful approaches to managing non-performing loans? And how are servicers setting themselves apart? What technology innovations are being developed in the servicing space? So they really didn't have an answer to all of these questions. There's a lot on the agenda. And frankly, I was a little disappointed with some of the high-level answers. These were experts that were on this call, and I thought some of the answers kind of glazed over the surface and didn't really get into the detail that I was expecting when I read these questions. But a couple things I did here. Nicole, and actually this was a theme with all of the panelists about uncertainty. So Nicole started with that uncertainty around foreclosure timelines because of the eviction foreclosure moratoriums. They're different in every state. And without really getting a full understanding of a specific state's foreclosure timeline and their expectations for the moratoriums, which essentially just means a halt on foreclosures. They're not allowing foreclosures in these hardest hit states. Without understanding those timelines and those moratoriums, it's impossible to price assets in specific geographies. So if that uncertainty can be overcome by researching specific state foreclosure processes, but it's a pretty large hurdle for investors who have not done that in-depth amount of due diligence to overcome. And what I mean by that is a note investor typically is skilled in reviewing real estate records, public records, property values, AVMs, credit reports, bankruptcy, title reports. There's so many different things that go into analyzing a note for sale, but when foreclosure is not a guarantee, a lot of deals you resolve without going through foreclosure. Not every investor is totally fluent in the legal language in the specific states where they're buying. So that's kind of a new level in this due diligence process that real estate investors note investors specifically, need to understand. If you're buying a good amount of assets in specific areas, you need to understand what those moratoriums are and how the legal process works in a lot more detail than you would have in the past because of the moratoriums and of the increasing default rates. So that's super important. Tom O'Grady from ProTech Valuation, he was highlighting the historic unemployment levels. They were as high as 14% in April. They are coming down now, but he predicted and kind of forecasted that that's likely to spike again as the unemployment benefits end, depending on how the federal government offers these upcoming subsidies and other opportunities to keep people afloat who are out of work. And then there was Spencer Lee from Red Hawk Research, and he mentioned the point about the election that whether it goes either way, Trump or Biden, Trump's going to result probably more focus on the economics of not necessarily the disease and the pandemic, but more of the numbers. I mean, he's going to focus on the numbers, whereas Biden, at least according to Spencer, is going to focus more on the economic, but through the medical approach. So Biden would be more focused on resolving the pandemic, which of course will enforce the economy as we get back to work. So that was interesting because he said either way it goes, it doesn't matter as much that it goes one way or the other in his opinion. It matters more that uncertainty, that hurdle's been passed. Once the inauguration comes, investors will have much more greater understanding of where we're heading next. And then he also mentioned that there was comical bid-ask spreads in the marketplace where sellers are expecting a lot more and buyers are coming in with really low bids. And when that happens, deals don't happen. Those bid-ask spreads need to close so that buyers and sellers are on the same page. And then finally, something very interesting, I think this was also from Spencer, and I was impressed with Spencer Lee, I think most. I haven't done enough research yet into Red Hawk Research, his company, and then their platform, which is a non-performing, I think, due diligence and management platform called Jonah. I'm going to do some more research on that because it seemed pretty interesting and he was a sharp guy. But something that he mentioned that I hadn't thought of before was the difference between the housing crisis that we're in now, which is more a result from the pandemic than the underlying housing policy. It's a lot different than the previous housing crisis in 2008 because of the fact that hedge funds have really scaled up as rental property investors. And that sets a floor in the market because as these hedge funds purchase rental properties that become in distressed situations or REO, they're able to be kind of like the low-end buyer, the buyer of last resort almost. If a retail buyer is not buying that property on the open market, the hedge funds are setting a floor for the value because they see the opportunity as part of their rental portfolio. So that was an interesting thing that I hadn't thought of before that kind of is an underlying change in the market that's going to support real estate values overall. Now you can debate the merits of having large hedge funds acquiring rental properties across the country. I think there are some hidden dangers in that, but at the same time, it does create more of a market that supports home values in general. So that's going to be an interesting thing to follow. And I think that IMN, I saw that they were recording the webinar, so definitely check out the IMN website if you want to see that recording. It'll probably become available, so I would recommend that and to be on their page for future opportunities. All right, let's jump into tech tips. This is what I'm most excited for today. So we're talking about a bunch of stuff. This business is awesome because we can run it with our phone and our cell phone, our computer and our cell phone, and all you really need is Wi-Fi and a bunch of these web services. So we talk about different web services every week, and this week, there's a whole bunch here. You're welcome to leave any comments if you have some specific questions, but this week we're going to be talking about Zapier. So Zapier, and especially their webhook solution, is a very powerful tool for people like me who don't know how to code. So I told you guys this in past episodes. I had some software developers I was working with that we've kind of gotten off track. And I've been resorting to doing a lot of things myself. And although my developers could build things in a more integrated way without using a third-party tool like Zapier to connect various web services together, Zapier allows me to do that without the need for a development crew. And what I've learned over the last, I did most of this work over the weekend, but what I've learned is that some products, some of these web services do not have any direct API integration. So you have to use Zapier, and their webhooks are super easy to use. So we're going to talk about that in detail today. I'm actually going to show you the back end of my Zapier system, and we'll get to that in just a second. Oh, I thought I changed my scene here. All right, so I'm gonna pull up my Zapier account, and that's gonna give you, if you're not familiar with it, an idea of what to expect. So, oops, I gotta bring it over here. Sorry guys, right here. Okay, so, and something's wrong with my mouse because I can't even see it. So this might be a problem. Let me put my face up here so you're not looking at nothing that's happening here. Because, all right, I need to change my screen. Give me 1 sec. All right, I'm moving this. All right. For some reason, my mouse is not showing up on my second display. So I'm just trying to like guess where the mouse is to try to drag this window back. All right, there, I grabbed it. And now I need to show you guys a different screen. Don't worry, we're managing this one on the fly. All right, so we're gonna mirror this display. All right, hopefully that doesn't screw us up later. Okay, so now I've got my mouse so you can see what's going on. This is my Zapier dashboard, and I'll move my screen a little bit so you're able to see a little bit more here, and move this over. All right, so I'm on a starter plan here. This is a legacy account, so I think that if you start a new account today, it's gonna be a little bit different. And Zapier does offer a lot of free options that let you get started with this service without paying for a monthly subscription plan. However, the webhooks that I'm gonna show you are a premium only tool that they offer. So we're gonna show you how I connect my Podio system to my website so that there's a back end where users can sign in to a membership portal and review products for sale. So this is pretty cool because it can be used in a lot of different ways, and the way I use it might not necessarily be the way you use it, but there are endless possibilities here. So I'm going to show you this executed non-disclosure to PMP Pro membership change. Now, if we scroll down, I made a copy of it because there's some sensitive information in the webhook codes. So I'm going to use a copy of this to show you what it looks like without showing you my webhook key. So for starters, we'll go over to Podio. Because in Podio, specifically Globoflow, which is the engine that drives my Podio automations, I've created a webhook trigger. So over here, you can see that when an item is updated in my buyer profile section, and the field non-disclosure agreement changes from anything to executed, when the non-disclosure agreement is executed, I fire off a webhook to specific URL that I can't show you here, but I'll show you an example of that URL on the Zapier side, and I send out some parameters that define what's happening. So I'll show you this and spell it out for you. Level ID number 7 is for members that have been vetted. Users of my website, FIXnotes buyers, who have signed the non-disclosure agreement move into level 7, which is inventory access. So when you're on level 7, you can review product for sale and the confidential borrower information that's protected by the NDA. And I also send over to match up the user email address. So that's super important. If you guys are signing up on the FIXnotes website, make sure you use the same email address as a buyer as you do as a student reviewing the course. But here's a little pro tip for you. If you want to see the FIXnotes course, it's totally free, How to Invest in Mortgage Notes. You can get total access to that course through the non-disclosure agreement. So before you even sign the non-disclosure agreement, just by going to fixnotes.com/buy and starting your profile, you will be given access to the course. So something to know, just make sure you use the same email address if you sign up in multiple instances. All right, so Globoflow fires off this webhook. It sends these parameters to this specific URL. And then when we go over to Zapier, we catch the hook. And the reason this is very important, and I can show you this right here, is that this is called an instant. See that instant? And this is the one we're looking at here. The others are not instant because they are not created with webhooks. And when a flow is not instant, it's generated, I think every 15 minutes or 30 minutes or maybe even an hour, Zapier will ping its resources to see if there is a flow that needs to be triggered. But when you have instant flows, like the one we're looking at right now, it happens just at the speed of light. It goes through the internet cables and all of a sudden you're vetted as an investor on my website. So the way that works is because of these webhooks. And we'll start with the catch hook. So this is the high level, the choosing the app and the event. We're using a webhook and we're catching a webhook. That's nothing special. But if we go to customize requests, we can see the details. Now this is the special code. This custom webhook URL, I should not be sharing with you, but this is a non-functional Zap that we're using. So this code is just, it doesn't do anything. It's anonymous because I'm going to delete this Zap. It's not even turned on. So if you fired a webhook to this URL, it would not go anywhere because I do not have this set up. However, what this does is connects our Podio organization in GlobalFlow, and that's where we put that URL. So I would copy the URL from the Zapier catch hook, and I'd put that over here. So essentially what that's doing is telling Podio when a non-disclosure agreement is executed, fire off a webhook to this specific address, and Zapier knows to catch that hook. So they catch the hook, find the data, and this is just test data that's in here right now. But it sends over the user email with a name of testy, and then a membership ID of 7. So we've captured the data from Podio, and now we're moving that data over to my paid membership site. So I actually don't charge users, so it's called Paid Membership Pro is the plugin that I use in WordPress. But since we don't have a paid membership, all of my options are free on the website, which you'll see. Maybe someday in the future you'll watch this video and there will be a paid service on the website. But for now, everything's free. And by the way, everything that is currently free will remain free. If we add any other services that you pay for, it's going to be new and it's going to be awesome. It's going to provide a lot more value because that's the name of the game here. All right, so this URL, and I've deleted this one because this one is sensitive and redacted. This is the URL of the, let me get out of here so you can see. This is the URL of my Paid Membership Pro plugin in WordPress. So there's actually a couple plugins that come together for this. Paid Membership Pro, you have to have a paid account to use this product, to use this service. And in the Paid Membership Pro account, you also need to add another plugin for Zapier. So that URL at the top here, type or insert, this URL comes from WordPress through the plugin for Paid Membership Pro, and then through the plugin for Zapier. So it sounds complicated, but it all connects together in a really easy way that even me, without any coding experience, can figure it out. So it sends over the user email, the user first name, and the level ID. And like I said, level 7 is when you get inventory access, when you've signed the non-disclosure. We don't send that as a JSON. I don't even know what that means, but you know what? I Googled enough to know that it works, and I set it up and it does work. So I didn't even have to understand that. Unflatten is no, and then that's it. That's it. It's 2 stages here, and we'll look at the outline right here. All it is catching a hook and then sending that data to the correct place in Paid Membership Pro. So there's so many uses for this solution. If you have different web services that are connecting, for example, I'll show you another that I'm working on here. This one's under construction, but this is called Push to Market. So what this is saying, and I can't show you the data because the hooks in this one are active. I'm actually using this flow already. What this says is that when when an asset in my Podio database, when I want to market that loan for sale, I click a button that pushes that to market and then sends a bunch of spreadsheet rows to Google Sheets. So essentially, and I haven't built this one out entirely to be automated yet, but what this does is lets me use Podio exclusively to generate the data that's necessary for you as an investor to analyze a deal for sale. Now you could use that if you're running your due diligence process, for example, to tie in your due diligence services into a Google Sheet. For example, I'll give a shout out to David Putz. David is over on Facebook at the Distressed Note Investing Jersey Style group. He's been building a Google Sheet due diligence tool. And I don't think he's using Zapier. I think he has some developers that are building a lot more into the macros and the scripts within Google Sheets. But it's a similar concept. You can bring in other data sources into your sheet based on an input, for example, a property address, and then provide a dashboard for your due diligence process to gather all the information you need to start that review. There's other things that you can do with this. I mean, it's endless. Whatever you can think of that, and I'll show you that because Zapier has so many integrations. Let's go to Explore here. anything you think of. You use ConvertKit. Oh no, that's not Convert. That's ClickFunnels. ClickFunnels came on the scene about 2 years ago as a really great, easy to use web intake process to bring investors or buyers or whatever contacts that you're looking for on the internet, bring them into a sales funnel. ClickFunnels is really cool, and you can plug that right into Zapier. You'll probably recognize a bunch of these other logos. Start in minutes, save hours. Here's a bunch of stuff here. I use Typeform. This is Typeform, which is how my buyer intake profiles are generated through a Typeform that then sends a trigger over to Zapier and to Globoflow, which goes into Podio. You'll see that's Google Forms, Google Calendar, Gmail. I could definitely build some Gmail scripts that would be nice to save me a bunch of time there. Google Drive. There's tons of various connections. Now, the one thing I will recommend is to make sure, if it's possible, to use, let me go to my Zaps. Okay, I did it. If it's possible to create an instant Zap, and if I go over to my Zaps, I'll show you that. It'll say instant because it's with these webhooks. If it's possible to create an instant Zap, you must do that. And I'll show you what that looks like. Down here, you'll see this one, NDA executed membership level. You'll see it goes from Podio to a filter that says if it's non-disclosure executed, proceed, and then it goes to the webhook. So this is not instant. It does not, and Zapier does that automatically. It tags a Zap as instant if it has the necessary components. And what that means is that it's built entirely of webhooks. And I think it can be used in a couple different ways. For example, this one's instant, even though it starts with Podio, because Podio is sending a webhook. And this one was my first iteration. I wanted to create this non-disclosure executed membership level using Podio, but it wasn't fast enough. And I was upset that and I did a bunch of testing this weekend, I was upset that a user would sign the non-disclosure agreement and then have to sometimes wait like an hour to get their access. So that wasn't working for me, so I had to come up with another solution. And what I was able to do in the instant version of that is, instead of starting with Podio, starting with catching that webhook, and then using Globoflow, like I showed you here, to send that webhook based on the filter. So instead of having this additional stage of filtering through Zapier, I did the filtering in the back end of Podio and then fired off that webhook instantaneously to be accepted through Zapier over to my paid membership pro site, which is a plugin on WordPress. So it's a lot of stuff going on there, but when it comes down to it, it's really just 2 webhooks, and that creates an instant integration within Zapier that lets you, as a buyer, sign a non-disclosure agreement and get access to the product much quicker. So we're going to show you that next. Let me see here if we screwed up everything when I moved the screen. Okay, it's still working. And I think, all right. So next we're going to get into assets for sale, because it's a perfect segue from our Zapier conversation, because now I can show you the front end, what we actually created here. So let's go back over to our, cool, and then go over to the website. Okay, so on the website now, we've got a couple new features. First of all, we've got My Account, which if you're logged in, it'll say My Account. If you're not logged in yet, it'll say Log In, and then you can log in there. I just fired off a bunch of those webhooks through Zapier so that if you have already signed the non-disclosure agreement but you didn't have a membership portal on my site because you didn't sign up for the course, previously the only way to create a user account on the website was through signing up in the Learn Notes section on the course. But now, going forward, it won't be an issue. You get a new user account whenever you go through the Buy Notes process, and if you've already done that, I've retroactively added an account for you. So go over to the FIXnotes website, click Log In where you see My Account here, and then you'll use the same email address that you signed up for. If I'm sending you emails, use the email address you've received emails from me, and you can log in there. I believe you'll have an email in your inbox with the password reset instructions. If you have any problem at all there, please email me and I'll get you hooked up with your account. So let's show you how that works. The My Account page, and this is just an example account. If you guys have been to my YouTube channel, East Coast Longboarding is the testing email address here. That was the old Robert Heitha YouTube account, was skateboarding videos, so disregard that. And we're loading here. It's going to take a second because I think I'm taxing the system with some of the background processes that are happening here. But essentially, the new system works like this. Buy Notes is now a separate page if you're logged in to the correct inventory level. So click on My Account once you're logged in, and you'll see Course plus Inventory Access if you are able to see the full inventory. If it just says Course Access, then you can do all of the learning notes you want. Everything is unlocked there for you, but you will not be able to use the Buy Notes function until you sign the non-disclosure agreement. So click on Buy Notes once you're logged in with the inventory access, and you'll see a new screen for vetted investors only confidential information. And I can't show you all of this Google Sheet, but the Google Sheet populating here is all of the confidential information. This is the property addresses, the borrower names, everything that as a vetted non-disclosure agreement signing investor, you now have access to for your due diligence. This looks very similar to the original Buy Notes page. So if I just go to Buy, you'll see it's almost the same, but this one is masked. You'll see right here, FIXnotes inventory masked. Whereas when I click it as a signed in user, I'm going to the confidential unmasked version of the data tape. So go try that out if you're looking for updated information on the current inventory for sale. You can find it here. I am working on a more regular distribution strategy for upcoming opportunities. So I think we're probably going to try to target the beginning of every month to distribute a new portfolio. So you'll be able to log in and self-serve, review what's available on an ongoing updated basis. So super cool here. And let me just show you something. You don't want to do this yourself, but I'm going to show you. If I canceled my membership level, so I do not have inventory access anymore. Let's cancel it. Then when you go to this Buy Notes page, and this is what all of you are going to see if you have not signed the non-disclosure agreement, when you click Buy Notes, you're going to get rejected. Content for members only. So in order to buy notes, complete the non-disclosure agreement process, you click here and then sign the NDA for access. And that will get you into the back end so you can see everything we've got for sale. So it's a short form with your preferences and your company name. And once you complete that, you'll get triggered on the other side to see everything that I see on the inventory. So very cool. And I'm not going to actually go into detail on the portfolio that's available right now. We've been selling loans all month. There's only 5 left. I've got I think 7 to 10 pending, and we'll have more product hopefully next week we'll have our next tape out. So stay tuned for that. All right, so case studies, this is an important part of the show, probably the most important part of the show, I would say, because case studies, I believe, are one of the best ways to learn this business, to really understand from another investor's perspective how the decisions were made and what decisions were made to result in either a win or a loss. And I think maybe not this week, but next week I'm going to share a loss with you where I just discovered it, lost a deal to tax sale. And that's going to be interesting for next week. So hang on to that one. But today we're talking about a full payoff. This is a non-performing second mortgage secured by a single family residential property. That's the SFR in the top. And there's $109,900 of value in the property, no past due taxes, 0, and $109,000 of equity. And I realize now that this was a mistake. This is not a second lien, this is a first lien. And I'll have to fix that for going forward. The reason I know that is because we did not show any details on the senior lien balance. We're only talking about the tax balance. And what's interesting, a translation between first liens and second liens. As a second lien investor, we look to the senior position mortgage status to know the borrower's intentions. If the borrower is paying their first position mortgage, then more likely than not, they want to stay in the home and they'll eventually pay the second. In the same context, if you buy a first position loan and the taxes are current, more than likely that borrower wants to stay in the home because they're paying the senior obligation. They're paying the taxes, they're just not paying the mortgage for whatever reason. And on the flip side, if the taxes were very delinquent, the borrower probably is signaling to you that they don't want the home anymore. They're not paying the taxes. And that's not a rule of thumb because some borrowers may be in a situation where they can't pay the taxes and they want to, and you need to have a conversation for that. But in this case, the borrower and the co-borrower are both deceased. They're no longer with us and the estate is selling the home. and we had a contact with the title company in May to prepare a sale of the home. And it was actually a lot more valuable than we expected. The fair market value that we had listed when we purchased the loan was about $110,000. But at the end of the day, that property ended up being under contract for $179,000. So we pretty much you can't lose in this situation. We have plenty of equity. Our balance was only $7,900. So there's plenty of equity for not only the borrower and the investor and the realtors. Everybody gets paid here. It's not a short sale. So we provided our payoff quote, which increased the balance by about $1,000. There was some arrears since they hadn't paid the loan since July of 2018. So those arrears were added to a full payoff balance of $8,848. And it was a full payoff at the settlement. We reviewed the HUD, the settlement statement, which showed our lien is on the list, being paid in full. And our only obligation at that point was to clear the title with a lien release following the sale of the property. And what I like about a deal like this where there's a title company involved is typically the title company is going to be the quarterback. I feel like the quarterback a lot of times when I'm managing a lot of different counterparties, realtors, attorneys, servicers, but when a title company is involved, they're the ones who are pushing along the transaction. And often the title company will just send you a lien release so that they can get it prepared and executed quicker than you can. In this case, we're preparing it and we'll send it to them because we have a tight process there. But you can definitely have that conversation at settlement to give them an advantage, because if they prepare the title lien release, then there's less moving parts and they can be confident that it's going to be recorded. They're experts, in their specific geography, in their specific county. So there's a little blurb here about the segment in every portfolio that sits in the drawer. So what I mean by that is that we don't work the loan because it doesn't have immediate value. It doesn't have urgency around it. It's going to get paid eventually, and until then, it's kind of sitting on the sideline. Unworked, but with value. So in some situations, it's just a waiting game. This one was a waiting game because it was under contract and we were waiting for it to pay off. But sometimes it's not as good as this situation, and you're waiting for something like a dismissal. So we talked about bankruptcy, I think that was in episode 5, where a discharged Chapter 13 bankruptcy on an underwater junior lien will wipe out the lien position, leaving you with an unsecured, uncollectible debt. So when a bankruptcy is in the process of being discharged, there's pretty high likelihood that it could be dismissed, which means it is not happening. The plan that was proposed in the bankruptcy is no more. Your strip of the lien that was potentially going to be lost in a discharge is now valid again. The bankruptcy's been dismissed. So a lot of loans in the drawer, once you've filed your proof of claim and you've at least got an attorney monitoring the account, those are in the drawer as well, a waiting game. In other situations, it's just a matter of resources and opportunity cost. And that was more the case on this deal. So we kind of take this term from the medical community, which is triage. Triage essentially is assigning degrees of urgency to various cases. And as a portfolio manager, I have to triage my portfolio on a daily, if not hourly basis to make sure that I'm hitting the most important cases first. So in this case, since it was a small balance, since the property was listed and under contract, we weren't going to be aggressively trying to pursue this. We kind of just had to let things happen and make sure that we were responsive and ready to go when that sale was, when the title company was ready to process the sale. So in this case, we did not warrant an aggressive collection campaign, and it actually wasn't a loan sale either because it's only a matter of time till it pays off, and it wouldn't make a lot of sense to sell a deal like this because the amount we'd ask for it, because of the sureness of the certainty around the payoff, it wouldn't make sense to sell it. Nobody would want to buy it for such a small return. So this was an interesting, easier case. Sometimes they fall in your lap like this. But that's why next week we're going to talk about a loser of a deal, a tax wipe. So stay tuned for next week for that. But for this week, we like to also talk about investor loan sales. So it's nice to talk about a case study where it's resolved through the borrower. And it's also great to talk about an actual deal that we concluded just this month for a first position, non-performing single-family home. So this is a non-performing first lien secured by another residential property. This one is in first position with a $20,000 fair market value and a tax balance of $0 once again. So they definitely want to keep this house. There's something going on. They're keeping it current. And this leaves us with about $20,000 of equity. and a balance of $152,000. So this was a pretty big loan. And this, on that triage scale, is higher up than the last deal with only a $7,900 balance. So this was an 09 originated purchase money loan on a historic home. The taxes are current and the property has been listed on the MLS. So they were trying to keep the property because they have the potential to sell it. So by keeping the taxes current, they kind of reduce a lot of the uncertainty that can come into a distressed asset sale. So a short sale versus and this is a short sale, but a short sale compounded with the defaulted taxes is just one more level of complexity that eliminates a lot of the potential retail buyers that could be interested in that home because they don't understand the inner workings. So in this case, they're keeping the taxes current. They are in default on the mortgage and totally underwater. So we got some information from the realtor on this one. This property has been on the market for 9 years. There was a major flood in the area and many investors took their insurance payoffs and they left the town. It's kind of a ghost town now. And this subject property has been gutted already and it's been started to be renovated. So it's not worth $58,500. This realtor told us it was probably worth $20,000 to $25,000. But it's a tricky situation. So we had no borrower contact. My client had no borrower contact and decided that it made more sense to sell to a hands-on investor in that market in North Carolina. Somebody who is at least willing to take back the property because that's probably what's going to happen here. Or if you could find a builder or an investor in that market to partner with, that's going to be the angle here. Because this $58,500 listing price is not realistic. It's not going to sell for that amount. So due to the fact that this property was on the market when we purchased the loan back in 2018, we thought it would be a short sale in a couple months. This was kind of held in that drawer bucket while we waited for that listing for something to happen, for some buyer to come to the table and for that realtor to reach out to us because we have the recorded assignment of mortgage in the county record. They would know to contact us as the lender at that point, but nobody contacted us. It wasn't panning out. So with a little more digging, we did discover that the listing price was unrealistic and that area was pretty much a ghost town due to the flood. And the loan was part of 5 offers in our June offering. And eventually it was sold to an investor as part of a package. So this investor did admit wholeheartedly when they bought the loan that they didn't think it was necessarily a prudent business move on their end, given the uncertainty, the value of the property, and the fact that it was on the market for 9 years. But because of the price, $13,000, and that's only 65% of the fair market value, the realistic fair market value of around 20 grand, that made sense for them. And more importantly, this was part of a package and the other loans in that package subsidized the deal in a way that made sense to the investor to purchase. So that's an important thing to mention. When you're looking at a deal like this on its own, I probably wouldn't want to spend 13 grand on this because I don't want to manage a property in North Carolina that is in need of some serious work. But as a part of a package of loans, I would buy this loan if I had other deals in the mix that were giving me more confidence to subsidize my investment in this asset. So this one does have equity, so you are in enough of a position to succeed here. And the exciting part, I think, is that you're in for a fraction of the unpaid principal balance. So you've got some leverage to discuss a resolution with the borrower that releases the deficiency balance. And that's why this borrower is listing the property for so much, because they want to negotiate with a lender to release their obligation to pay the rest of the debt back. So if they sell it for $58,000, let's say they sell it for $52,000, and you're left with a $100,000 balance, that's the deficiency balance that's still owed by that borrower. And in an investor's position, they can use that leverage to negotiate a payoff of the loan with the borrower that releases the deficiency balance. So essentially you can agree to forgive all that extra money that's owed if they're willing to cooperate and work together to get the house sold. So this was a loan that was just sold. I think this one closed like last week along with this other package. And I'm very excited to maybe do some rewinds in the future, coming back to these case studies from the investor's perspective. And if you recognize this loan, you're watching the video, or any of our other investor loan sale case studies and you'd like to be featured, I'd be happy to have you to discuss what happened next after you bought the loan. All right, folks, so we're on to the giveaways. This show's just moving along quick. Every week, oops, that was our bird angle. Is there a bird? No. I haven't seen anything out of the corner of my eye today. All right, so every week we offer a 15-minute consultation to a commenter, someone who's liked the video, subscribed to the channel, and commented with either a topic you want to discuss or a specific question about business or real estate or mortgage notes. And then, of course, you got to get on the profile through FIXnotes.com/buy, so I have your phone number and we can connect for a phone call. But this 15-minute consultation is up for grabs every single week. And I'm happy to, that's the show. I'm happy to talk about really anything you want with regards to business or YouTube or real estate. And I'm very excited to get on these consultation calls because I think that's one of the best ways that I can relate to you guys is if we have a one-on-one discussion where I can help you get past the next level of your growth as a real estate investor or specific to note investing. So I'm very excited for the future of these 15-minute consultations. We've had a couple of them now, and they've been really fun, but I've actually had no comments last week, so nobody qualified for today's consultation. So I encourage you, please leave a comment, like the video, subscribe. If you got any value at all out of this, it means a lot to support the channel and to put yourself in the running for a consultation. So thanks guys so much for joining us today. There's no birds today. We had like some really great success with those first 2 episodes where we were able to find, we saw a cardinal, we saw a tufted titmouse, and then we've had kind of a dry spell with regards to the birds outside the window. We'll show you all the angles here. Just to wrap up the show, this was an awesome one. I hope that you kind of understand where GlobalFlow, where I'm coming from with that GlobalFlow integration, and hopefully you'll see some ways that you can implement that in your own process, or maybe in your life in a different way. I mean, there's a lot you can do with Google Sheets and Google Calendars and combining with your email that you may find some use that I didn't even think of. So that's another thing we can talk about on a consulting call. We can kind of discover some different ways that you could use Zapier based on the products and web services that you're already using to automate your life, to make things easier, to make things more efficient, and at the end of the day, to free up your time. And that's what the name of the game is about. We invest in mortgage notes to create passive income streams that we can then use to have a better life, a more free life, and financial independence. So thank you so much, guys, for joining us. I'm going to call it here. Let's do this and do this. I think it worked. And that's it, folks. Have a great day, everybody. Peace.